Meta just reported earnings, and it does seem like investors are excited. The stock after hours is up roughly 5%. The company did beat on both earnings and revenue expectations. Today, what I want to do is take a closer look at their press release, kind of just share my overall initial thoughts. Later throughout the week, I will do a little bit more of a deep dive, but I want to say the company does talk a little bit about their capital expenditure for this year and for next year. And you guys know I'm super big in the semiconductor industry, so they did share a nice amount of insight, and it gets me excited for my Nvidia position. So let's take a closer look in today's episode, and let's get started. So I want to say probably most investors were expecting good results. I mean, we did have Google report earnings yesterday, and the stock was up over 6% as the company did see strong growth in their advertisement and in their YouTube ad platform as well. So it did seem like advertisement money to some extent is still going to the big players. We saw Google, we saw Meta. I'm personally excited for one of my favorite companies, Unity Software, another big position in my portfolio, who deals in the ad market. And I do believe what we're seeing right now is going to be a nice bullish trend for Unity, as this is also another advertisement play. So we can see right now, I believe I have it here for revenue expectations. Analysts were expecting roughly $30 billion. We could see that Meta did report earnings, and their revenue was roughly $32 billion. So it did beat analyst expectations. Diluted earnings per share were $2.98. It does seem analysts were expecting closer to $2.89. So they did beat on earnings per share, and they also did beat on revenue. So if we take a closer look, I mean, we're going to see this company saw nice growth overall. Daily active people up 7% year over year. Most monthly active people up 6% year over year. Facebook daily active users up 5%. Facebook monthly active up 3%. Ad impressions and price per ad. Ad impressions was up 34% year over year. Unfortunately, we still are seeing average price per ad that was down 16% year over year. But overall, we are seeing a nice kind of growth in users, and that's what you want to see for a company like Meta, where they are a huge advertisement play. Revenue was $32 billion, up 11% year over year. The company also spent roughly $793 million in buyback program, and they still have roughly $41 billion available and authorized for repurchase. I do want to say Meta was pretty aggressive when their price point was a lot cheaper when they purchased more shares. I think right now they're just going to be more of a small buying every quarter in and out, just to kind of return back to shareholders. But I do believe they're going to be very opportunistic, and if there's ever a huge buying opportunity, that's when they're going to start and throw most of their money into buybacks. Company obviously a huge cash machine, roughly $53 billion in cash and short-term investments, and roughly almost $11 billion in free cash flow. The company does have roughly $18 billion in total debt, but remember, plenty of cash, plenty of free cash flow. Not something I would be worried about. Another thing that I thought was pretty interesting is headcount was down 14% year over year, but this is only impacting roughly half of the employees that they laid off. So I do believe next quarter we are going to see a little bit more, a little decrease, a decrease in headcount as well on a year-over-year basis. So overall, during their earnings call, I know Meta's going to talk a little bit more about kind of their products and how they're using AI and all that. And obviously, I'm going to discuss that on the next episode. But I really wanted to look at was more on kind of their capital expenditure and what they're kind of forecasting for the next year. So one thing they do mention is they believe for this year, Reality Labs operating losses will increase year over year. And before we take a closer look at how I'm seeing this in the AI and the semiconductor market, if you are enjoying the episode so far, make sure to hit the thumbs up, as it does help me grow my overall channel. If you want to support, I do have a membership. Make sure to hit join. I talk about the semiconductor market. I just dropped a video earlier today. I do believe this is probably my 6th or 7th premium video there, so make sure to subscribe to learn more. If you can't, just hit the subscribe button. I'm trying to hit 30,000 subs by the end of the year. And finally, boom, boom, boom.
Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
And they also mentioned that they don't really want to provide an outlook, too much of an outlook beyond 2023, but they did share some kind of outlook for 2024. They expected a few factors to be a driver of total expense growth in 2024 as they continue to invest in their most compelling opportunities, including artificial intelligence and the metaverse. And one of the things that they mention is, hey, they are gonna expect operating losses to increase meaningfully year over year due to their ongoing product development efforts in augmented reality, virtual reality, and investments to further scale their ecosystem. I know a lot of people are not liking this metaverse push, but within this metaverse push, there's obviously a huge improvements of technologies, a huge improvement of software. I personally look at Meta as a technology company, not a social media company, and has done really well for me. Like I mentioned, it's one of my top positions in my portfolio, so I'm okay with them continuing to invest money in their reality labs. They do expect that their capital expenditure for 2023 to be in the range of 27 to 30 billion. This is lower from their prior estimate of 30 to 33 billion. Some investors, especially some semiconductor investors, might say that, hey, this is showcasing that they might not spend too much money on AI products, on things like the H100, so it could be bad news for the semiconductor market. But they do mention that the reduced forecast is due to both cost savings, particularly on non-AI servers. Again, so it seems like that's not the case. Semiconductor investors, especially those in the AI market, should still be very excited. They do mention that a good shift of capital expenditure is being pushed into 2024 from delays in projects and equipment deliveries rather than a reduction in overall investment plans. So right now, I'm gonna guess, this is just my guess, Nvidia has placed, Meta has placed a large order on a lot of AI components. Some of those AI components are H100. Unfortunately, the H100 has a huge long lead time. It also has so because of that long lead time, Meta Platforms is unable to get some of those products. So obviously for AI servers, the H100 and a lot of these AI chips are very, very important and crucial. So it's no point for them to kind of open up or start up these systems. It's just going to cost money and just waste space. So instead, they're just kind of pushing some of those investments later on when they're going to get some of those products. I'm guessing the H100 is definitely causing a bit of a delay for them, and they're just being pushed back into 2024. Looking ahead, they do mention that they're going to continue to refine their plans as they progress throughout the years. They currently expect total capital expenditure to grow in 2024. Great news for semiconductor companies, driven by their investments across both data centers and servers, particularly in support of their AI work. Obviously, this is going to bode well for a lot of semiconductor companies as they are going to invest in a lot of advanced chips. So, right now, it does seem like the ad market is at least here to stay. It might not be growing at those crazy, crazy levels, but it's definitely here. I do believe we saw it with Google. I expect we're also going to see it with one of my favorite companies, Unity, another of my top position. So that's the first thing. The other thing I want to mention is this is a company that's really focusing in AI, and they're going to continue to invest, even though 2023 might be a lower year because of equipment delivery times. Again, I do believe that might be the H100. They're pushing those investments to 2024, and they expect to increase their total capital expenditure in 2024, which bodes well for semiconductor companies. So I hope you guys enjoyed the episode a lot. Take care, have a good day, and see you next time.